Even though cryptocurrency backers tend to scoff at Jim Cramer's claims, he accurately forecasted that cryptocurrencies had more room to fall in June. Back then, his bearish points revolved around the idea that the Federal Reserve was going to destroy crypto with interest rate hikes. Since his predictions have an inkling of accuracy, is his claim about Cardano ADA going to zero going to happen anytime soon? Just a few months ago, crypto companies were advertising massively during the Super Bowl after digital currencies enjoyed a dizzying rally in 2021. But right now, a lot has happened to other cryptocurrencies. Bitcoin and other cryptos have plunged to significant lows, and companies such as Coinbase announced layoffs. According to an expert, the crypto world is on fire, and everyone is just rushing to the exits because there is a total loss of confidence. Cryptocurrencies have hardly been immune either. Since Bitcoin reached an all-time high in the previous November, the value of the world's most popular digital currency has fallen. Ethereum is also down, and so are Dogecoin and Cardano. Bitcoin supporters have always touted the digital currency as an inflation hedge, but in fact it has failed to behave in that particular manner. As shares of tech companies have plummeted, so has Bitcoin's value. This negative trend has proved that cryptocurrencies are large speculative financial assets that are subject to microeconomic forces. It has been a rude awakening for the millions of people who bought cryptocurrencies, especially if they got into the craze last year in 2021. The crypto industry sentiment was upbeat as the year began after Bitcoin and Ethereum hit all-time highs that November. The NFT boom, Bitcoin futures ETFs, and the feeling that crypto was becoming mainstream were considered positive indications of a lingering success. However, that wasn't the case. Even crypto enthusiasts argue that blockchain projects like Cardano are safe from attack, but cascading problems defeated that claim. 6 of the top 10 hacks of all time also happened this year. These unending problems have given crypto critics wings to fly. Investors' defenses have been crumbled as these critics have potential evidence to support their statements and predictions. The longtime Mad Money host Jim Cramer is once again in the spotlight. The American host had displayed a highly controversial stance on cryptocurrencies over the years. In 2017, he predicted that Bitcoin will surge to $1 million in the future, but actually ended up changing his mind and labeled it an outlaw currency. He joined the pro-Bitcoin team in 2020 once again, appreciating the coin's maximum supply of 21 million as a major advantage over traditional financial systems and fiat currencies. He even went ahead to compare Bitcoin to gold at the end of 2020 and purchased some amount of the asset when it was trading around $17,500. As Bitcoin was trading north, so was Cramer's support towards it. He even requested his salary to be paid in Bitcoin instead of fiat currencies in April 2021. The most recent crash downturned his visions entirely, and he morphed back to being a crypto critic. A chunk of his crypto predictions have been proven wrong. In September of 2021, he advised investors to cash out their holdings, stating that the Evergrande's debt crisis in China could instigate a market crash. Bitcoin ended up skyrocketing to an all-time high of $69,000 2 months later. Cramer also opined in January 2022 that the correction from Bitcoin and Ethereum could be over, which implied that investors should reconsider entering the market. In contrast to the forecast, the leading cryptocurrencies continued their downtrend and are currently trading at $17,000 and $1250 respectively. He is back at it again, and this time looks unusually different. His predictions perfectly match the general opinion that has been revolving around the entire crypto market. Jim Cramer recently told cryptocurrency investors that they still have times to sell their awful positions. His previous advice has often been inaccurate, propelling many participants to expect a market surge. During his show, he urged investors to cash out their cryptocurrency at all costs. He thinks it's never too late to exit the market, suggesting that the crypto winter was nowhere near its end. Quote, "You can't just beat yourself and say, hey, it's too late to sell. The truth is, it is never too late to sell an awful position, and that's what you have if you win these so-called digital assets." End quote. Cramer strongly believes the most speculative cryptocurrencies that could possibly crash to virtually zero are Ripple, Dogecoin, Polygon, and of course our beloved friend, Cardano. Most digital currencies have indeed lost a major chunk of their valuations, with Bitcoin being down nearly 65% since the beginning of the year. In addition, investors' interests have significantly tumbled, while multiple companies experienced liquidity issues. Former giants in the industry, including FTX, BlockFi, Three Arrows Capital, and Celsius even filed for Chapter 11 bankruptcy. It is just expedient for Cramer to think negatively as well. The market has been through other winters in the past, and many digital currencies preserved through the turbulence, including Bitcoin. At the same time, Cramer argued that the industry is overflowing with boosters who desperately try to inflate the market with considerable financial efforts, relating his claim with Tether, the company issuing USDT. There's a whole industry of crypto boosters trying desperately to keep all the things up in the air. Not too different from what happened with bad stocks during the dot-com collapse, he said. Jim Cramer also criticized Tether, which had a market cap of $65.57 billion. As a matter of fact, the Mad Money host said, Tether, a so-called stablecoin that's supposed to be kinda sorta pegged to the dollar, still has a $65 billion market cap. Also, Cramer's investment advice is often derided on social media, with critics regularly claiming they short his bets. Notably, in August, Cramer got involved in a feud with the Financial Times Alphaville blog. The publication had joked that Cramer's call that inflation had peaked in July led them to worry that it hadn't, but of course, it was just a joke. In a previous Alphaville post, we may have implied that Jim Cramer's peak inflation call was a reverse indicator for our readers. We regret the error. It was not our intention to give Cramer's opinions any credence whatsoever, the outlet posted. Then, in October, Cramer apologized for pushing views to buy shares of Meta, only for the company's stock to plunge to its lowest level in 6 years. Recently, he cashed out his crypto investment last year and bought a farm with the earnings. Now he is wondering if the entire space was just one big con. He sold all of his Bitcoin last year and bought Ethereum instead, noting that people use the latter to transact. However, he traded his Ethereum position after he found out that his bank was reluctant to accept it. I think that there's just been this gigantic con, Cramer said. In an interview on CNBC, Squawk Box, Cramer said that the crypto markets were generally bearish and identified 3 assets that he believed have no future. Is Cardano ADA one of them? Well, he said, quote, I think you should be negative on crypto. The ones I'm negative on are the XRP and the Litecoin and the Dogecoin, because I have yet to find anyone who really takes them. He added that altcoins have little chance of surviving very long. It's like $80 billion worth of non-Bitcoin that is really destined to be wiped out. There's still people who conflate blockchains with them. Apparently, he questioned blockchain technology, stating that it does not have significant potential Amazon and Google would have incorporated into their business models by now. However, Google has taken a step into crypto by partnering with digital asset exchange Coinbase to permit users to pay for cloud services with crypto assets. He also weighed in on other crypto issues, warning his 1.9 million Twitter followers that Binance, the world's largest crypto exchange, is similar to FTX. According to an IOHK executive, we may probably be in the dot-com era. He recalled the past ones and how many companies failed. But in the same way, giant achievements including Amazon and a new slew of successful internet companies, now called Meta, followed. The executive predicted that ADA will stand up and emerge as a survivor of the crypto space's dot-com era. This will be achieved due to an ecosystem that is set apart from other blockchain projects, such as the lack of deep-pocketed venture capitalists. Different scenarios validate Cramer's claims, especially for Cardano ADA. Following the collapse of the FTX exchange, the outlook for crypto has become even more desperate, even though inflation appears to have peaked. There are more black swan type events to come, but there is a belief that it might be among the last men standing. Although, the American host is puzzled by the unwillingness of the market strategists to admit that most cryptocurrencies have little to no value at all. Why are there no strategies that most strategists say have the most crypto and willingness to sell them quickly? He asked. Well, at the end of the day, so many people still believe in crypto. It's just about time. But it's still quite appalling that Jim Cramer's predictions is coming at a time when investors' sight towards crypto is already dimming. But of course, what are your thoughts on this? Let us know in the comments section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe notification buttons.